Hello, everyone. Thank you for joining in to our webinar here today. My name is Kara Oosterhuis, and I'm the Western Canadian Agricultural Field Editor at realagriculture.com. And I will be guiding you through today's webinar as I am hosting for the Simpson Center for Agricultural and Food Innovation and Public Education at the School of Public Policy at the University of Calgary. Thank you all for joining us. We would not be able to host webinars like this without you guys and without our viewers and our listeners, so thank you very much for tuning in today. As you know, this is a Q&A, so there will be opportunities for questions. You can definitely submit them, but we will not get to them until after the guest is finished his presentation, and then we will get right to them. But please, in the meantime, whenever you're thinking of them, feel free to put them into that little question box at the bottom of your Zoom screen, and we will, like I said, get right down to it. So to get to today's main event, our guest is Mr. Doug Horman. He's the chairperson for the Canada-Asia Synergy Group, and he's president of Timberwolf Trading Company. Doug formerly held a distinguished political career and served 4 consecutive terms as member of the Legislative Assembly of Alberta for Spruce Grove, St. Albert, and also served in a number of senior capacities, including Deputy Premier, Minister of Agriculture, Minister of Advanced Education and Technology, President of Treasury Board and Finance Minister, as well as Special Advisor on Trade and Federal-Provincial Relations. Doug, I'll let you jump in from here. And like I said, if any of you guys have questions, feel free to put them in the box and we'll get to them right after.
Well, thank you very much, Karen. Good morning to everyone on this Zoom. It's an interesting platform. I can see no one, so I'm hoping everybody can see me, and we'll go into the presentation. The presentation that I'm giving you today is really related to what is the largest market in the world for agricultural commodities and products and food for us. So it's very important to Alberta, it's very important to Canada as a marketplace, and that's China. Obviously, there's a lot of issues with China these days, and I'll touch on some of those as well. And I would by no means suggest that I'm a fan of the regime of China in terms of their political side of things, but you cannot ignore the market of Asia, and you can't ignore China when you're talking about Asia. So with that, I'm going to try and share my screen here, and we'll see how this all works. So this presentation is in partnership with a group that I work with a fair bit in China out of Hong Kong, and that's Hong Kong Corporate Services. I've done a lot of work with them by onboarding companies going into mainland China, and we used Hong Kong as our launch pad. Whether that stays the same in the future or whether things change, it remains to be seen. I still think it's going to be the launch pad to China because it enjoys, sorry, I'm going to get this to work yet. It enjoys the rule of law. It enjoys a better relationship with China. So I'm just going to kind of go through these. China, as many of you would know, was the #1 economy for over 5,000 years. And really the only blip on that was in the last 150. So we're going to talk about China, but a little history we often forget that China is over 6,000 years old. It was probably the oldest civilization. They marked their start at 6,000 BC. They've invented gunpowder, they've invented clocks, ice cream. They were the first country to use an iron plow. They were the first to use a water wheel. They were the first to use the decimal system. So they've been a very prominent economy and a prominent civilization for a lot of years. I mean, they were the first with a crossbow. They were the first to use paper, stirrups on saddles. Probably one of the more important inventions, toilet paper. As the world's largest economy, one would argue that maybe the States is still the largest economy. I would suggest to you that China right now, from a consumption perspective, is the largest economy on the planet. They build a skyscraper every 5 days. Over the next 2 decades, China will build 20,000 to 50,000 new skyscrapers, or the equivalent of 10 New York cities. They will have an estimated 23 cities with a population of 5 million or more by 2025, and that's within the next 4 or 5 years from now. They already have 8 mega cities that are over 10 million, and according to Bloomberg, only 5% of the population of China have an outbound passport. So you think about the number of Chinese visitors that we would receive, think about the fact that a little over 5% of all Chinese have an outbound passport today. What happens when they get to our level, which is about 40 to 50% of Canadians and US citizens have outbound passports? That's going to make a major impact on Alberta. It's going to make a major impact on Canada and tourism. As an example, in 2016, their outbound tourism expenditure was 21% of the world's market of outbound tourism expenditure. So even with only 5%, they're the number one in the world in terms of outbound expenditure and tourism, bar none, and will continue to grow. The other thing to remember is this is also the first generation of Chinese to work with international companies. As I said earlier, there's, the transition of China is taking place before our very eyes. Some directions we're not really all that happy with, as the Prime Minister said today or yesterday. This coercive diplomacy that China is engaging is really about them feeling their strength on the international stage these days. And they are, this is an exceptional time in the history of China. We're seeing a change from the revolution evolvers to the offspring of the one-child system. There's a Chinese generation gap. The values of those born, pre-1980 still have these strong values of the generation that's in control of the party, the governing party. There's a very important time in the history and path for China. There's a story that I tell where I met with an individual who owns a very large company that creates all of the propeller shafts for all of the ships that are produced in China. And so he's well over a billionaire. And he's chatting to me in a very old style Chinese belief that everything that is happening in his company, he controls and he makes all the decisions. Sitting beside him is his daughter, who is a Harvard graduate. And she'll be rolling her eyes as her dad talks. But she's the next generation of Chinese CEOs. She's the next generation of where the economy of China is going to go. The Chinese middle-class workers are numbering 200 million people, and this is actually an older stat. My guess is it's probably closer to 250. They have a wealth of over $30 trillion US. There is more mid-level, mid-class expenditure or dollars to be spent in China than all of the United States. They do like the Canadian brand. They love all brands, actually. More than 50% of the world's luxury goods are now sold in China and are continuing to grow that marketplace. So when we look at Mr. Mao, I don't think he had in mind that when he brought forward the revolution that this is where China would go. But I would be remiss if I didn't say that you would be making a mistake if you didn't think that the governing party was still in power. They are very firmly in power and they are exercising that power every day. But this is kind of what we saw or we think about when we think about China. And the reality is today's China is closer to a consumer-driven China. It's more about the Xbox, it's more about the Starbucks, it's more about that middle class that's rising. In fact, right now, probably there are 350 million millennials in China today. And their spending power, it is estimated now, is almost equivalent to the middle income spending power of China, which is also the equivalent to, obviously, the United States spending power, and Canada is dwarfed by that. Some of you may have heard about Singles Day, November 11th, it's coming up again. In that one day, China will buy online well over $30 billion worth of products in one day. And it's everything. It's everything from the Xboxes to food. And this is what's important to Alberta and to Alberta's agricultural community. So a little bit about the second revolution, which is the second cultural revolution, which is really about moralizing capitalism. Xi's cultural revolution is an attempt to sanitize this existing capitalist motives and to infuse a new capitalist ethic into it. He kind of wants to reverse the previous president's edict about getting rich is good to getting rich lawfully is good. So there's been a significant amount of work done on trying to clean up some of the things that have happened in the past. I think that he's had some success, but having traveled there, he's got a lot of work yet to go on cleaning things up. These are the past three presidents with the current president in the forefront. Deng Xiaoping appointed Hu Jintao, and Hu in the party appointed the mild-mannered President Xi, who's turned into anything but mild-mannered. Mao fixed the country, Deng fixed the economy, Xi is going to fix the party. And when I say fix the party, he's going to run the show, very, very clearly he's in charge, but he's also trying to open the doors of China for trade and commerce. And again, through the 19th National Congress, thought I pulled that one out. Oh, I think I have actually the wrong presentation up. Anyway, we'll just keep going. All of the best laid plans. President Xi's, and this is important for Canadians to understand, President Xi his feeling is that China has been humiliated for the last 150 years, and he wants to turn that around. So his focus, to use a President Trump thing, is to make China great again. And he actually was starting to do that before President Trump started to do it with the American people. But he has really championed this. And make no mistake about how popular he is about doing some of this within the country. Certainly there are things that he's not popular for, but there are many, many things that he is popular about. So he's a major participant in changing the direction of China. He's a believer in opening and free trade. In fact, it's interesting that you will hear the Chinese president talk about free trade and opening boundaries probably more often than you'll hear our leaders talk about that. He believes that China can make contributions to the world. And in fact, they are probably one of the largest contributors to world peacekeeping efforts. They're also one of the largest investors in Africa today. And I'll show you a little bit of their investment that they're doing in that respect. The China economy has slowed down and is continuing to slow down. There will be some pain in this slowdown for China. China has got to maintain 4 or 5 minimum 6% growth every year just to keep up with the number of people that are coming into their marketplace and the consumption that they're trying to create. They are trying to turn their economy from this manufacturing sector to a more of a robust consumption-led economy, and they've had a significant amount of success at that. And in fact, we are seeing the benefits of that because our exports have in fact grown to China. This is the wrong one. So I'm going to actually stop sharing right now because I'm actually pulled up the wrong slide. So give me 1 second and I'm going to come back to this. Apologize for this. It'll only be a moment. Kara, I've now lost my entire screen here.
Just one moment, we'll share it from the back end.
Yes, please do. Okay. Kara, you have control of that, I take it?
I don't know. That would be Lindsay who has control of that.
Okay. So we can go from here. So we are.
Shared control there, Doug, so you should be able to still navigate through them on your own.
All right, thank you. So China is no longer the key manufacturing hub of the West, but it still accounts for a significant amount of their GDP. And I think that's important to keep in mind. Yeah, I don't have control of that. Sorry, unless I can do it from here. You can go to the next one, please. There we go. So agriculture accounts for only 9.2% of their GDP. And remember, for us, food is a huge part of our production and will be into the future. And this is an area of significant potential for Alberta, but our focus has got to be important here. This is not the same market as selling into the United States, into California, or into New York, or into Quebec or Ontario. This market is definitely different. If you go to the next slide, please. 48% of their GDP currently originates, and actually it's a little higher than this now, from services. And again, this is driving to that consumption economy that China is building and will continue to build. Go again. This is very key. 40% of their household spend is on things like education, healthcare, entertainment, and travel. And when they talk about entertainment, they spend $500 million a year eating out. There is probably 600 million people who are buying items online. And a lot of that after COVID is now food. They're buying fresh food, they're buying salads, they're buying meats. These are places that Alberta and Canada can really play well in an online market and on a fresh delivery market. Next slide. So China has invested over $100 billion in clean energy in 2015. Again, this is something where Alberta can play very, very well. They are huge spenders in trying to clean up their economy. One thing that we will hear about lots is that China has done a lot of damage to their environment. While this is true, they are also spending a lot of money on trying to clean up that environment. Because of that middle income group, they want a clean environment. They want clean air. These millennials want to have the same kind of fresh air that we have in Canada. And they are forcing their government to spend this money on these areas. Again, it's a communist government, it's state-owned enterprises. Those are things we have to be aware of. And they are things that we can actually leverage. Go to the next one. But there's a great China problem. Part of that problem is they have to keep, China government knows that they have to keep a very large, very growing middle class happy, because unrest is not good for them. Go to the next slide. Part of the issue is they've built everything they need, more or less. They need to keep that middle class happy. They're getting too expensive as a manufacturer, believe it or not. So a lot of that manufacturing is moving to places like Indonesia, Vietnam, Cambodia, Thailand. Those will be very strong markets for us as well as they grow and they get more middle income, discretionary income. Now their Chinese population is aging very fast. They have polluted the air and the water, and they have a vast uneducated population. When we say vast uneducated or vast poverty, China wants to get rid of poverty. They have about 100 million people that are living in what we would consider extreme poverty today. And that's a really big number. But keep in context that you're talking about a population of 1.5 billion. So their number is less than 10%. They think they don't need foreigners. This is something that is getting, I think, even bigger today than it was when I started going back and forth to China 20 years ago. In those days, 20 years ago, in agriculture, they needed us. They needed us to help them build their dairy industry. They needed us to help them build their pork and their poultry industries. And Canada played a very, very big role in the development of those industries. They've gradually, as I've talked about, they've gradually started to see themselves as the leaders of the world economy again. And now they're starting to think we don't need anybody and we can do this on our own. That's a mistake. they will, and they are making huge errors in a lot of the stuff that they're doing in terms of the investments they're making in other jurisdictions. But they're also looking at the governance models that they have for their corporations is not up to where it should be. And that means that they make really bad investment decisions in a lot of cases. Not to say that they all do that, but there's a big chunk of them that need a better governance model. Gradually getting over, and again, this is part of that generational shift that I talked about earlier, where you've got the old style Chinese management style is gradually shifting over to more of, I would say, a European, North American type of business style, which bodes well for us and bodes well for the opportunity that we would have to ship product to China. So go to the next slide, please. Some of you may have heard about this, the One Belt, One Road. This is really the answer that the Chinese government has put on the table to help them continue to build infrastructure, to continue to build jobs, and to continue to build economic activity for the Chinese people. But it isn't investment in China. It's investment on the old Silk Road. The Great China problem is, how do you continue to build infrastructure when you've already built 50,000 skyscrapers and you've already built a new airport in every city? Now you have to go outside of China. So if you go to the next one. This is a representation of what China is investing in outside of not only the One Belt, One Road, but everywhere in the world. And they are probably the largest investor in Africa. Click one more, please. Should come up. Oh, it didn't. That's okay. They are a very, very large investor in Africa, probably the number one investor. But this gives you an idea what they're investing in other places around the One Belt, One Road. They have $113 billion invested in Asia, and that includes some of the areas that they're doing within the Afghanistan and the Pakistan and moving east along the border. So go to the next one. I like this slide for a whole raft of different reasons, other than it just kind of got a chuckle out of it. When we think about the United States and our neighbor to the south, obviously it's our biggest trading partner. They are by far the market that is our go-to market for our agricultural commodities, as well as our finished goods in many ways. But we can't look to the United States to help us with China, because as we've all seen with the detainees we have in China, really came from a disagreement between China and the United States. Canada is the one that got caught in the crosshairs of that. And when we talk about tariffs, we are not going to be well served by getting our detainees out if the Americans continue to do the tariffs. However, this does create a bit of an opportunity for us if we can bring product from China to here, convert it into a Canadian product and put it into the American marketplace. We actually could get some benefit out of that. So we go to the next one, please. This is something I'm sure many of you know and have seen before, that our canola exports to China had a significant drop, May 2019 to May 2018. No surprise here. This was something that was retaliatory, but it was also short-lived. We are starting to see product go into China from a variety of different ways and means, similar to when I was Ag Minister and we had BSE. China is ideological, yes, but they're also practical. So when they need canola, it'll get in there. And if they use soybeans or sunflower oil to blend off, then they'll move on to those products. But I can tell you, if you go to the next slide, we just lost it. I don't know if you guys are still seeing the slide, because I'm not. There we are. So China's trade, this is a very recent out of Stats Canada. But as you can see, our trade is actually back up and growing with China right now. A lot of that is energy. A lot of that is food and commodities, and a lot of it is commodities. If we go to the next one. This is Canadian trade with China, and based on seasonally adjusted numbers, you can see that things are starting to come back to where they were and have been. You can also see that the Chinese economy is starting to come back, and they are certainly back to where they were relative to moving around. You look at traffic congestion, which is an interesting little thing that the embassy in Beijing does for us. They're out moving around and back doing the economy as they always have been. But one of my friends in Beijing is frustrated because we are, have 200 cases a weekend of new COVID cases. They have one in Beijing, and they'll shut the city down for that day or the next 3 days. They're responding differently to the whole COVID crisis, but this is about trade. This is about doing business with China, and the reality is business is still moving forward fairly rapidly. Go to the next slide, please. This is just, again, I kind of like these. We will be sacrificed if it means getting a trade deal, and there will be things that we will have to deal with. I don't think we can depend on the president to come to our aid, and certainly China is not helping that situation either. Both sides are digging themselves in, and we're in for a long fight with China on the relationship. It's going to take a long time to repair it, but that doesn't mean that business and exports aren't going to happen. We're seeing more and more, as I've said before, of our exports going into China. If you go to the next slide, please. This is a short-term growth outlook for China. And as you can see, and I mentioned, they need to have well over 5% just to maintain and keep things moving forward. This is the near-term and farther outlook for China, where you have the 3 forecasts. You go with the consensus. You can see that we are still going to see significant growth in demand coming from China. And that demand is going to materialize in the form of tourism. It's going to materialize in food, and it's going to materialize in food in a very distinct way. We go to the next one. The opportunities for us are very, very large in China, but just a couple of other things that I want to put on the table before we go to questions. When we're talking about agriculture, or we're talking about food exports, and we have always talked about value added. We want to move to value added. My view is we can't move to value added unless we understand what the customer wants us to move to. In China, 50% of what they buy is now online, and that includes their food. It's delivered every day. It's delivered to the door of the apartment. If we're going to sell beef, or if we're going to sell something that is a value-added product, from a protein isolate to whatever it is we're going to sell, we have to understand how they're going to buy it and how they're going to use it. And China is the bellwether for the rest of where Asia is headed. So if they're buying everything online today, they're buying packaged ready meals, they're buying meals that are ready to cook, they're buying health food, they want to be healthy. Those 350 million millennials are the market for Alberta's agriculture in the future. And we need to understand how they buy, what they buy, and they buy every day. So distribution and logistics becomes incredibly important for us. It's no different than the oil and gas sector. We have to have a pipeline to our marketplace. Our pipeline has to be fast, efficient, and it has to be daily delivery. Lobster going to China today is daily. And we have to do the same thing with our agricultural commodities. The last thing I'll say is this: as the ag minister, when BSE hit Alberta, it was painfully obvious that we had not diversified our markets away from what is our biggest trading partner and our biggest friend. But at the same time, when that border closes and we have nowhere else to go, we're hooped, and agriculture and the primary producers pay the price. That's why I look to China. That's why I look to Asia. I think we have to diversify, whether we like what they do ideologically or not. Their consumers will be our consumers in the future. And with that, I think I'm a little over time, and so I'm going to stop there, and we can stop share and move on to questions. Kara?
No worries, Doug. Technical difficulties, that's how it goes. Of course, these things are never quite foolproof, and that's both the beauty and the downfall of doing things live, but
yeah,
through, and it's all good.
Sorry about that.
We do have a few questions coming in here. The first one here is, how can Canada trade more with China and get the advantages of the Chinese market without becoming hostage to China?
I think you have to view China in two different streams. One is the politics and the government of China, and you have to deal with that. There's nothing, you're not going to be able to not deal with it. But the reality of doing business in China in a lot of ways is that they are probably more capitalist than we are. They are more materialistic than we are by far. They will look for ways to make these things happy. I mentioned in my presentation that President Xi doesn't mind these people getting rich. He just wants them to do it within the confines of the rules and regulations that they've set out. And remember too, the people, the consumers of China, they're the ones that you want to target. It's getting them to draw your product versus trying to push your product. And I think that's a very important thing for us to understand. Social media in China is huge. Use it to your advantage to get them to draw your product in. And you still have to abide by the rules of the government of China, and their rules are changing. The rule of law is very slowly coming back into play into China, but it's still dicey.
Mm-hmm. So another question here is, what value-added products can we sell to China?
Just about anything you can think of. You have the largest market in the world. Again, it's how you package it. And remember that we can make whatever you want, right? And people often tell me that. They say, well, I'll build a beef plant and we'll just sell beef. You can't sell a 10-ounce steak that you think somebody's going to barbecue to somebody who doesn't have a barbecue, has never used a barbecue, and has no idea how to cook a 10-ounce steak. So you have to think about, what does the consumer's plate look like over there versus here? So is it a 6-ounce steak? Is it strips of meat that we can put into hot pot? And how do we test that to make sure that it's going to be acceptable over there? We have a very good plant here in Alberta that makes a value-added meat product. It's owned by a Chinese family, in fact. They've had a terrible time trying to get the product into China. They're everywhere else in the world, including Costco's here in North America, but they had to actually go and change the way they were doing their product mix here so that it would actually fit the taste in China. And that's an incredibly important thing for us to understand if we're going to go to value added. Don't make it for the family sitting in Colorado. You make it for the family sitting in Guangzhou.
So how do we brand these Alberta and Canadian products to the Chinese consumers, especially when compared to European products? How do we stand out next to these European products?
We stand out very well. We have to play up the fact that we have a regulatory environment. The Chinese consumer still views foreign product as superior to domestic product. That is changing, though. We are losing a little bit of that, because part of what the President Xi's commitment to the people is he doesn't want to be a producer of crap anymore. He wants to be a producer of high quality product. So Chinese brands, especially with millennials who have a huge amount of nationalistic pride, believe it or not, they look to, if they can find a Chinese brand that they feel is equivalent to or better than European or Canadian brands, they will buy it. So again, use the social media piece, play up the safe, clean, regulatory environment that we produce food in, farm to plate, right? We can trace it all the way through. Traceability is still important. Traceability is the story behind how you made the product is still good if you make the product that they want.
Yeah. So what do you think the market is for idea and technology exchange? Like, is China interested in idea in agri-tech?
Oh yeah, China's interested in agri-tech, but remember too that they have vast amounts of land that frankly are not very productive because they've done some really interesting things to that land. High mineral contents, metal contents. You have significant amounts of pollution in some of the waterways. So technology for them in agriculture that would help them replenish the soil, that would help them create better agricultural practices, that's very important to them, and that's something that they can see the benefit of. Incredibly difficult because it's government controlled. Agriculture is one of those things, just like energy and the military, where you are dealing with the government on a day-to-day basis. When you're talking about pharmaceuticals or nutraceuticals, when you're talking about some of those areas where we can excel, we can do some very interesting things, and the IP that we can offer to them is incredibly valuable. I would throw a caution. If you want to have a product that you're going to sell in China that has proprietary IP, be very careful about how you show that IP, because it will get copied.
So another question that we got in here is, in the current COVID environment aiming for an economic recovery, what policy areas would you recommend the provincial and federal governments focus on? Exports, innovation, interprovincial trade barriers, agriculture business risk management tools, supply management?
That's a big list. You know what? Interprovincial trade is something that is almost a holy grail in Canada. We have a tremendous amount of work to do in order to be able to move product from Manitoba to BC without changing the weights on the highways, as an example. CFIA has to become our partner in export, not our inhibitor in export, which they seem to do on a regular basis. We need to be able to work with those regulatory agencies, Health Canada, CFIA, and the transportation groups in order for us to be able to trade internationally. And I'm not saying just China, even to the United States. And the States has the same problem. I mean, every state has a different transportation rule and regulation as well. Organizations like PNWAR, the Pacific Northwest Economic Group, is a great group to work with. The New West Partnership that we started in Canada with Saskatchewan, Alberta, and British Columbia to try to harmonize what we're doing in those regulatory environments would be a definite asset. Those are things that we should be doing now while we're in this COVID stage. But also things like the Invest Alberta Corporation that the government of Alberta just stood up. Getting them out there, or at least getting people ready to go out there to do that export when we can, is really, really critical. Canada cannot survive on its own domestic consumption. We just can't do it. And certainly in agriculture, we can't do it. So we need to be out in those marketplaces, and we need to be out in those marketplaces on a regular basis, not just once a year.
So shifting a bit back to the China conversation, how do we gather market intelligence on consumer needs? Who do Canadian companies go to for connections into China?
So you have tons of information that's out there. Some of it's real, some of it's fake, to use another Trumpism. But what I've found very, very helpful is the embassy in Beijing has been, they do a lot of work on statistical analysis, and a lot of what they do is they take kind of the high thing that the government might put out there. They'll take some data that they can get from online sales, which is a really interesting tool to use, because, I mean, we use it in North America as well, but China buys a lot of stuff online, and what they're buying, when they're buying, how much of it they're buying, where they're buying it from. All of that is critical information for us so that we can start to develop the value-added products that those people will want to buy online. So that whole system of e-commerce is a huge data mine that we should be spending a lot more time on. And I would say not just in China, but in Southeast Asia as well. A lot of online purchases are done through Southeast Asia in the same way that done through China. Remember that 1 in every 4 people on this planet is Chinese. They're not all in China. And they are all scattered throughout. They're all investors. They're all basically buying online as well. So I would use those 2 sources for sure. I wouldn't use the government of China.
So another question here, it says, in my view, China can be fickle when it comes to partnerships in agriculture. How does Canada maintain and expand our market share in China for products such as beef when Australia or the US offers a very similar product?
Right now, I would say that the best way for us to get China to be locked into us is to have China invest in partnership with us here in value-added production that will go to China. Again, it all starts at the consumer side. What is the product you're trying to sell? Because it's not just beef. It's beef something. It's oat something. It's barley something. It's canola oil something. It's not just those commodities anymore. If we're going to play on just the commodity basis, Australia, Brazil, even Europe, heavily subsidized, can play in the same market that we can play, and you're just chasing the margin down. I would suggest to you that what we need to do, and this comes back to being in the marketplace and creating that relationship with the business people who are in those distribution channels in China, whether they're e-commerce distribution channels or store channels, because interesting phenomenon that is starting to happen is the Chinese are starting to do both. They're doing online shopping in the store. So they're finding the stuff in the store online. And we do some of that, but it's really starting to grow there. So finding those partnerships and then getting them to invest, as they have in the energy sector in Alberta, in those partnerships with us to create the value added here. That whole value chain investment is something that I've been working on for quite a while. Really difficult to do, but unless you can show them that you're focused on their market and not their market as a secondary. And that's what we've done a lot in agriculture. We've said, well, we're going to take care of US and domestic, and then anything that's left over, we'll sell out there. Well, that anything that's left over is not what they want. They want the first part.
So I guess we can talk about China, but are there any other markets that have potential for Canada other than China and the US?
Oh yeah. I mean, the Southeast Asian market, I think, is going to be huge for us as well. You're looking for anywhere where they're looking to replace proteins, and proteins can be not just meats. They can be proteins from pea starch, or peas. They can be any one of those other areas of Southeast Asia are going to be looking to expand as their middle income expands. When my brother and I did West Glen Milling, and we were selling rolled oats, it was interesting because we were selling mostly in Central and South America. As the middle income of Mexico rose, so did our sales. So look for markets where they are looking for that next level of safety, that next level of security. And frankly, they're friendly to Canada. So there are a number of those kinds of markets that we can get into. China's it's the biggest dog on the block, and you can't ignore it.
Yeah, absolutely. Well, unfortunately, we are out of time. I'm sorry. I know there's still some unanswered questions, but that's just how today went. Time flies when we're having fun, I guess.
Sorry about my technical glitch.
Oh, no, I think we have all sat in some sort of position like this where it just doesn't work, and we made it work. So thank you very much for your presentation, and thank you everyone for tuning in today. It was great to be able to have your questions and to get some of the insight from Doug as well. So please keep an eye on your inbox for a follow-up email, and if you haven't registered to join us on October 20th for our next webinar, that is next Wednesday, I believe, please do. We'll be welcoming an expert panel on the topic of water in the ag industry. So it's shaping up to be a great conversation with Jason Unger, Ben Belvin, and Alex Ostrow. So thank you again, everyone, and take care. We will talk to you again soon.
Thank you.